Time for a little final hour session. 50 minutes to the close. Markets are up today. We had basically a retest of the close yesterday. Opened there, tested, came back down and retested around 10:25 a.m. and proceeded to rip to the upside for the roughly 50% ATR. Here's some levels that I've been watching all day. 63.50 has been the sticky resistance. And as I take this trade into the close, I'm hoping that will hold. I would like to see price, ideally for my daily profit play workout today, if price is less than, I'm not drawing that very well. If we are, let's do this, less than 6345, we're going to go full profit. If we are between 6345 to 6350, that's going to be small loss. I'll do the math on that. If we are 6350 6370, more trades to watch. But we're going into a zero DT environment, so I'm not sure what type of credits I'm going to get above that when I'm looking to fade. I trades at 63.50 by 55, 63.50 by 60 by 70. So I've got some levels in where it's like very small risk, high reward. But we are seeing this 50 level continues to hold. Hopefully by the end of the close in the next 48 minutes, we're going to see price respect these levels. This was around, the 50 level was around a like 15 delta this morning. I would hope that it's going to at least respond and let market makers, contain the levels. This 50% ATR as well. If we get back down to that level, that'd be fantastic. That's right around 63.40. So I'm taking this daily profit play into the close. Let's see what happens. I do have some break evens to keep an eye out for. So I have a bear call spread mix. Then we talked about this in a masterclass yesterday for daily profit play. If I have anybody that's in that class that didn't have a chance to join, I'm going to post this link here. These are some added trades that I put in today. Let me make this top of inbox here. Okay, down. This is for it's a beer there for a quick catch-up video for all new daily profit play members. Okay, so if you have access to Telegram for daily profit play alerts, check out that video. It's about 30 minutes. The masterclass recorded yesterday should be posted inside your classroom as well. Announcement today, this is what I saw. We've got Fed speakers talking all afternoon. Headline breaks. Apple's up like 4+% today. Trump and Apple have this big announcement. Seems like the market's trying to sniff it out and front run it. So let's see if we can do some digging. Market started, opened up here today right at the middle. We have the 50 and the 100 ATRs. We did end up directionally going up to the 50% ATR today. And that was a nice liquidity and gamma resistance level. It's been pretty much all calls since that 10.25 surge when we retested the lows. VIX has retreated a little bit. And again, watching to see if we can close below 63.45 for the end of the day. Get this out of the way. Lines in the sand, I'm watching. Let's have a look. So that's in for 2 contracts. So right now I'm down about $125 at that 63.45, and I'm down about $86 at the 63.50. I have to watch that into the close. If price can get back down below 63.45, that would be great. And the rest, overall, still P&L positive on the day. That's good. Added some trades in for GLD. Taking some bites. That's really it, taking some bites. If we zoom out for a second, which I think is important, today's price action, despite prices going up, okay, prices went up, but did they go up dramatically higher than what we saw early in the week? Not really. We had a plus minus in the day of about 34 points. I think we went up about 50 points. So we have gone past what the implied volatility suggested this morning. This market has gone up around 49 points. Okay, well, hopefully we can settle somewhere between that plus minus 34, which means we push back down, let's say, to 63.38. Let's see what that gets us. That would be a low here to a high here. That puts us around 37, 38 points for the day. A lot closer to what the market has already kind of priced in and expected to see. So we will find out. I'm going to put a chart alarm right down here at this 63. I'll put it at 63.40. See if it gives me a little bit of breathing room for some profits in these next maybe 15 to 30 minutes before the close if I can manage it. Otherwise, I'll kind of I don't know, hold my breath, cross my fingers, and see where price closes on the day. It's obviously like I'll still survive. I mean, if I lose everything today, I'm going to lose like I think $800. That's the most I can lose. So if price goes up and closes above all my levels, I'll lose $800. If I'm right and we can close below 63.45, I'm actually going to make 125 and 5. So I can make $625 on the day if price is less than 63.45 today. And that will feel like a nice little win. So hopefully I can keep it. And obviously taking this into the close, if I can manage a portion of that versus the whole thing, that's fine. I'm not trying to be greedy, just trying to win the day. All right, so keep an eye on that. Let's see if we have any headlines on Apple. Okay, Apple's up 5.38%. We're still at 3.17 trillion market cap on Apple. It's like top 4 companies in the world as far as market cap. Surprisingly, Apple's still way behind the other Mag 7s, but yet Apple had a good day today. Let's see what we have for breaking news. Anything, I don't think it's going to give us the news, but they surge on 214. Well, they surged the price to $214, $100 billion U.S. manufacturing pledge. Investors expect major announcements on factory expansions and job creation. So, Tim Cook, Trump today, apparently after market, announcing Apple's plans to basically onshore some manufacturing. I don't know if that's adding jobs per se, or if that's just, it says factory expansions, job creation. I would imagine if you're onshoring manufacturing, it's going to be light on the job side. I would imagine, as far as like what Apple can do with it, and I'm sure there's plenty of subsidies and benefits for them doing it. They wouldn't just do it out of the kindness of their heart. There has to be some type of tax benefit. There has to be, I don't know, there's clearly a motivation to have an announcement like that for a stock like this to surge and kind of get back in the game. What's also interesting is Apple being up today, 5+%. There's been zero progress on Apple in the AI space, which I don't think is a bad thing. I mean, everything AI feels a little hypey, a little bubbly. And, Apple's not participating in that language, that commentary, that narrative has nothing to do, very little to do with AI. But what's funny is this was all AI driven. As far as like Apple is going to partner with Microsoft and have, something with their iOS, blah, 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 whatever. That was AI. This was AI. Okay. And then it gave it all back. And here we are, not back at the highs, just off the lows, fighting in a really choppy zone. I mean, if Apple breaks below 190, that's not a good spot. I'd say for the integrity of this range to hold, this being support and the highs being resistance, we need to see Apple continue to kind of work its way into 220s and see if this is going to continue to hold. There's a lot of resistance right here that could hold around 225. I think Apple is kind of a hallmark of a lot of people's portfolios, whether you like it or not. If you're in large cap tech, you have Apple. And funds are usually just generating premiums by selling covered calls. So there's lots and lots of gamma walls, lots and lots of liquidity levels that are going to act as resistance because just so much premium being sold at, pretty much at the money or just a couple strikes higher. So it's rare that Apple has like a runaway squeeze move. Okay. Hill's asking for WTI. Would you look at that? So you want to look at oil? Okay, we can look at oil. We can look at oil. Come on, dude. Give us a freaking rejection, would you? If this thing runs up into these levels today, I'm going to be a little bit mad because these were not here this morning. Like the 60 and 65 were not here this morning. I go back to, the weekly high and low from last week, this high, this low from last week, still watching those range levels. And the way that price played out today, it's like, straight down yesterday and then climbed up, straight up today, hasn't fallen. It's just lingering around that 63.50 handle. So come on, man. I need 4 points of cooperation on the markets to come back and settle, hopefully 63.40 or lower. 45 is what I need, but 40 would be great. All right, let's go a little top down here. So S&P is up 0.78%, SPY up 0.79, Nasdaq 1.31, Q's up 1.28. Nice little rip on Nasdaq today. Dow is up 0.27, Russell down. Interesting. Russell's actually red on the day. That's kind of unfortunate. You have, again, it's probably led by this. You look at the heat map today. What's leading the way? Broadcom, right? This is a $1 trillion company. Apple, $3 trillion company. Amazon, $1 trillion+ company. Tesla. These are big, 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 big companies. $1 trillion+ company. Or it was. What's Tesla now? What's market cap on Tesla? 1.03. Yeah. I mean, we have AVGO, top 10, $1 trillion+. Tesla, $1 trillion+. Amazon, $1 trillion+. Apple, $3 trillion. I mean, even Google Meta, $1 trillion+, leading the way with some green. So the advanced decline, we have only 52.8% of stocks advancing today, but they're big ones, and therefore the market is up 0.7% in the S&P, 1.3% in the Nasdaq. That's a big jump because of the weighting, because of the concentration. Okay, what's not doing well? Healthcare is down today. Consumer defensive had a big pop on Walmart. We're back up above $100. I'm like up 7K on Walmart with I think my calls expire this month. Wow, that's a big move. I might roll this. I might roll Walmart. Let's see here. So WMT, I have some shares. I'm up $7,700. 100 out to August 15th. So next Friday, if we're above 100, I get it called away. I might roll this, and even if I get 30, 40, 50 cents, that would be 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Yeah, we'll see. I'm not going to roll it right now, but I may roll this to grab 30, 40, 50 cents, keep it at 100, and maybe give it another couple of weeks. And if it's, let's say, 50 cents, that'd be another $250 towards this chunk, which is enough to get me up towards 8K. And yeah, I mean, the good part is it's protected. And if I wanted to keep Walmart in the portfolio, I'll keep selling covered calls. Okay. All right. That's some of the big movers today. Watch this Wednesday. I mentioned this morning. We had 3 winners on my pinch point scanner. I logged those this morning. Broker filled me on all these orders. GO, so ticker is GO, closed out for a 30% winner. Ticker WAT closed out for a 30% winner. And CWST closed out for a 46.5% winner. All closed out by the broker this morning. So pinch point scanner, 9,500 stocks, had 13 actionable. I'm still working on pricing some of these out. We do have some earnings coming, not so much on this list here. I know SoFi has had some volatility lately, but I'm looking to see on some of the get sets. We have some household names here: Robinhood, IWM, AT&T, Cisco, ADT, Home Security, HPE, Hewlett Packard, Carnival Cruise Lines, Coca-Cola. DraftKings has earnings tomorrow. CVX, that should be Chevron, GM. Okay, so just taking a look at some of these names, like there are some good volatility movements ahead over the next 30 to 60 days. But these are my goes. These are what I'll be looking for trading to see if they can price out. But that puts us up over 81% winners for pinch point. Not too shabby. Almost 82% winners. Model portfolio is up almost 15, over 15 grand. Not bad. But I told traders this morning. One of my favorite things is setting a trade, setting to take profit, and letting the broker do the rest of the work. Automatically close out for profit. We've done that on, I think, 17 of 18 trades, which feels pretty nice. Okay, let's keep going. Volatility index. Volatility at 16.72. Let's run the numbers here for a potential top on the day. We're trading at 63.59 or 63.49 again. Intraday low and high with a VIX at 16.72. That should put us just over 1.04. We're not quite there. We're not even close, actually. But from the close yesterday to the highs today, that's around 0.82%. So do we have like a late surge of another 0.1, 0.2%? Well, if that's the case, I'm going to take on some extra trouble and heat, maybe get filled at the last minute. But we're kind of coming into crunch time here with only 35 minutes left of trading. So I'd love to see this, resistance at 63.50 hold. But potential top, 63.65. I don't think I'm going to get much for it if I take the trade now. SPX is probably offering little to no credit, but let's find out. 63.65. Yeah, I mean, we're talking 10 cents. I'm not interested in that trade. So I just got to hope that the 50 and 45 will act as some resistance to get this thing to settle down the last couple of minutes. Okay. What else? Russell. The only index that's down in the day. Dow is up, S&P is up, Nasdaq up. Volatility down. Move index bond volatility is back up. SVXY just offered a dip during that correction last week. That's it. I mean, nothing here that I'm interested in buying. DXY, dollar continues to sell off. This is probably a good thing for the global economy. In all honesty, this is a good thing for equities to rise and see the dollar getting weaker. Oil has come down below $65. Interesting. I actually want to look at a trade on copper today. We had that huge distorted move on copper last week, and I'm going to see if I can take maybe a low risk, high reward bottom trade on copper. It may not work. It may be a little bit distorted and too illiquid, or the bid ask is really wide because of the craziness that happened last week. But I'm going to take a peek at that. But we're back down below 65. Let's see here. Oil futures fall despite India tariffs, U.S. inventory draw, Wall Street gains, oil prices reverse course. Sanction uncertainty. Okay. Well, I only have one trade running on oil, and it's a $50 futures trade. So if I go to oil futures, which is ticker CL or /CL, as long as price stays above $50, I've got a nice little income trade on oil. I think this is still an incredible amount of noise on oil. I know that energy is probably one of the better sectors over the next 1 or 2 years to be in. It's usually non-correlated to the S&P. It's certainly not tech correlated. But I just wonder, geopolitically, like whether oil continues to push lower where everyone's unhappy, or continues to push higher where everyone's unhappy, or in typical fashion, it just stays sideways, right? We'll find out. Natural gas, a pretty good spot to be long. I mean, if you're willing to take a stab here and throw some risk capital at it, $13 is a pretty good spot to consider going long. I just don't know how bullish this is going to be. If you're lucky, 13 to 23, 13 to 24 would be a great run. Buy UNG at 13, get out of here at 23, 24 if this is a range trade, or even if you buy it at 13 and take it back to like 16, 17, 18. Just a nice little pop with some multi-month support around that 13 handle. Gold is sideways. Dollar has been down. Gold hasn't really done much, but I still think gold is consolidating. I'm doing quite a few creative trades on GLD and gold futures right now just to generate some income. I'm looking to kind of buy these dips. So a 144 moving average, a 200 moving average, positioning for options. I'm willing to own shares using GLD. So a 280, a 275, a 270, any type of pullback. I could see gold consolidating. This would be an ascending wedge. And could this blow the top off? Sure. And we could still go when this bull market continues, right? 400 gold, 4,000 spot price gold. I'm pretty bullish on it. I'd like to see a bit more of a shakeout. If possible, I'd love to see a bit of a shakeout where gold has a resistance level here and it pulls back and maybe fakes out on that wedge. And then we can actually buy some dips. I'm still, after that 200 moving average. But something tells me that if price just consolidates longer and longer and longer and longer, that this catches up, this catches up, this catches up. And all it takes is like one little dip, and then the market's ready to rip. So I still am positioning long and bullish on gold and silver. But I'm just not trying to participate at gold's all-time highs. I'm not trying to participate at silver at these highs. I'm already in. Like silver, I've been in for a while. Traders have been following me for the last 12 months. Know like this has been one of my bigger core positions as far as holding and trading silver futures and looking at some pretty awesome levels. I mean, 2011 all-time highs, it would have been 2011 and 1980 all-time highs on silver. So if we can still continue in this trend, I mean, there's really nice support. We've had a nice bull market since February 2024, dynamic support all the way through. Anytime we come back and find some of these moving averages, it's a good spot to be buying dips and seeing the market just kind of grind through higher lows and higher highs. But my target on spot price silver is $48. I'd love to see us get there. That would be another like 20 to 30% upside. So another 26%. If we have any dips, it gets to 30+%. That's encouraging. Okay, Bitcoin. Resistance, past support resistance area, like 108, 109, previous all-time highs at 112 right there. Before that was like the 108, 109 handle. So we shall see how this whole thing plays out. I still think it's like dynamically supported. I do wonder if the rate cut in September offers Bitcoin a bit of a surge into the end of the year. Maybe it does, because cutting rates means more dovishness, means weaker dollar, less purchasing power. And obviously inflationary pressures are not going away. So it's good for gold. It's good for Bitcoin. It's good for silver. It's probably good for US equities, right? The big concern is like the huge debt, the huge debt refinancing air pocket that the world. It's not the U.S. It's the world. The world is facing a big debt restructuring in the next probably 12 to 18 months. We just don't know how quickly everything hits. It's like the staggering and timings of when loans are due and when refis have to happen. I mean, it could be this open window of like a couple of years, but it's going to make things a little bit more difficult if yields and rates continue to stay elevated. So I don't know. I just think that Bitcoin still looks pretty good. Structure wise, I like buying dips. We pull back into moving averages. I'm buying more. I trade some of the ETFs, FBTC and IBIT. I trade both of them. Okay, MicroStrategy, holding some decent support here. Resistance around 370. It became support. It's kind of hanging in there. It's a volatile play compared to spot price Bitcoin, which obviously is a volatile play, but MicroStrategy is more. Do we have dynamic support? We have a buy zone here. Is it going to come back in and find a buy zone and try to get back to these highs? I have a trade going into the end of the year that if we are greater than 390, if we're greater than 390, I have about a 430% winner clocked in, or hopefully going to be locked in on MicroStrategy. All right, we're seeing some fresh highs right now. 6350.46. Come on, you freaking turd. Might be one of those cash settling type days, or we finish at the freaking highs today. Come on, man. What was the high right here? Yeah, we just broke the highs for the day. 6350.75. We're at 50.95 right now with a poke of 51.12. Stupid freaking market. Well, I mean, I calculated the numbers. These are still lines in the sand. It's just going to cost me if we finish above 63.45. I'm kind of playing defense today. If we hang out at 63.50, it's a manageable risk. Not the end of the world. Maybe I'm down a couple $100 net. But still, I've got 28 minutes left. Let's see what the market does. If it surges for the rest of the day, that is going to kind of piss me off. So we'll see. Levels are lining up. I mean, I don't know. It seems like one of those days where it's like, yep, market's just going to freaking go. We called the 63.65 based on the VIX this morning, which is just over 17. And from this low, currently the market's up around 0.82. I could be watching this thing run into that 1+% move on the day, which puts us up into like 60 to maybe 65. So it's about to get interesting. I hope not, but what's to stop it in the next 17 or 27 minutes? So hopefully this is a bit of a manipulation at the end of the day, kind of, closes or fades, but we'll find out. All right, that's MicroStrategy. Coinbase, big drop after this rip on stablecoin announcements. Might still be worthwhile. Let me see if I can get something on Coinbase at the 150 handle. Let me take a look at this one right here. Price this one out. I'm going to look at a ratio spread on Coinbase. I haven't looked at this one in a little bit. We've had a lot of profit on Coinbase. I'm just looking at some income trades through December. So we're trading. This is out quite a ways. 150 kind of premium can I get? Not the worst. So there. Get a $1.64. Am I willing to own some Coinbase? I am. And let me see, that low is around 142. Let me check here. Make sure I'm not getting into something that's like overbought or overextended or just not good, right? Earnings forecast to decline, but still earnings are growing. Volatile share price, which we know. Price to earnings, 26 times. That's not good. We're trading at 303, fair value at 140. That's disappointing. I'm going to stay out of this one. Yeah, I'll stay out of this one. That is kind of disappointing. I mean, again, the trade was going to be a 155 by 150 or a 150 by 145. This isn't too bad. I mean, if I were to own it below the April lows, okay, I'd own it below the April lows. If I had to take assignment, I'd give myself some wiggle room on some cushioning to the downside. We'd have to essentially kind of break the stablecoin thing. Bitcoin would have to fall pretty aggressively. But the 145 would be my naked put, and I would still own it with a $5 cheaper profit trap, as well as the 145 credit. So if I did this trade, 145 minus, so at current price, 138, that's about a 55% discount from current price. Off of these recent highs, that would be a decline of, I mean, almost 69%, 70%. So, I mean, I think it's okay, but you know, I don't know. We have lows. If it came down to test the low and then came back up, that trade is fine. It's a pretty easy one to flip. I mean, it's high premium. So if I had to do like a 30-day call option, if I did own the shares 30 days out, you know, I get like $20 to $23 for a covered call. So, I mean, I could go from a 138 ownership to like 118 and give it a chance to repair for, you know, maybe $5 to $10 a share. I think it's income. It's quite a bit out of the money if I go out to December. I mean, that's true. I mean, it's a 3 delta, man. So there's risk. I don't know. I'm gonna take the trade. 145. I'll accept 140 on this trade if I can get filled. If I take this trade, I'm going to put this in for my project options edge. 145. So 145. Now it's trading mid 165. I mean, come on, guys. 144. All right, it's got filled at 144. Okay, that's not bad. So project options edge, I'll post this in just a second. 144 is pending. I'll go 143. Kind of, I want to get all these filled. I don't want to play around with the prices too much. 143 is getting filled. So that'll be the official post of I'm getting all my accounts filled at 143. Jiminy Christmas. 142. Getting filled there. Okay. Okay. $141. I don't want to go lower than 140. Let's go this one here. You got to be kidding me. All right, final offer 140, and I'll let it pend if I don't get filled. Getting filled at 140. I'll put these in at 140 for the rest. Getting filled at 140. Getting filled at 140. Filled at 140. Okay. So project options edge getting added in. This is coin. Coin is a buy 150 put. Sell 145 put. Pulled in $1.40 credit. Willing to own if assigned. And price is less than 145 by expiration. Break-even price would be the 140. So I'm assigned at 145 if assigned. 140 minus 5 minus $1.40, 138.60. And right now, based on the mechanics of this trade, 97% chance of profit. And about a 3% chance of assignment. Okay. So project options edge, that's posted in Telegram in 30 seconds. Okay, getting posted, and then throw this in. That is a December 19 ratio spread. Okay, so filled on that one. All right, we've got 20 minutes left. Come on, you freaking turd market. At least try to respect 63.50 today. I mean, we're talking about a move that's getting us up to like a 10 delta from this morning's open. Come on. Move this thing back down, 6.345. Just be respectful of 5 or 6 points, would you? All right, we got 20 minutes. Trump announcing successor to JP this week. Okay. I mean, the noise in the market's already created a shadow Fed anyway. I don't know who it's going to be. I've been looking at like Poly Markets and Kalshi and those betting markets. They've got 3 or 4 names in the mix, so it could be like one of the Kevins. I think it's like Kevin Waller or whatever. I don't know. It doesn't matter. There's somebody. I don't think Powell's necessarily going to resign, but I don't think anybody cares what the Fed does or says right now. I just think it's a bunch of noise. So, like the likelihood of them cutting rates in September is pretty darn high. If not, I mean, we have a 95% chance they cut rates in September. If not, Trump is going to lose his mind. So they're probably cutting in September, probability again in October and again in December. So right now, markets are saying 3 rate cuts coming by the end of the year. If they're coming in 25 basis points increments, I do wonder how that's going to affect the bond market. It should be hopefully a bit of an orderly change versus what we saw last year. Last year, the Fed cut aggressively and the market hated it. So this year, if they cut orderly, like 25 basis points, does the market just kind of stay sideways? Maybe rates don't go down, right? And that's the one thing we have to remember is just because they cut rates, okay, they're cutting on the short end of the curve, not the long end of the curve. So if you're looking at the US 10-year, which is a lot of the price action here, look, if you want to know if it's a good time to buy a house, if it's a good time to buy a car, if it's a good time to borrow money, if it's a good time to restructure or refinance, these should be lower. If these are not lower, nothing has changed. If we're sitting here sideways, 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 current rates you've seen for the last year, it's still the same. If these go down, then things might get a little bit cheaper, right? Waller is typically hawkish, suddenly bullish. I don't know. Again, man, I don't know. It's so noisy. I don't really care. I think as long as yields don't make any type of drastic move to the upside, that's a good thing. The rate cuts are probably coming. I mean, it's funny how this week we heard from 2 major financial banks, Morgan Stanley, Bank of America, saying that the Fed is not going to cut. I don't think that's true. I think that is another like noisy headline, because according to what the market's showing, according to what the futures market says, we're cutting 3 times by the end of the year. So does that help the short end of the curve? Probably. Does it help the long end of the curve? To be determined. I don't know. Okay, we're about to find out. Okay, let me see. Do I have a link to like Poly Market polls on Fed chair? See if I can find one. All right, here's your Poly Market right here. So Kevin Hassett 25%, Kevin Warsh 19%, Chris Waller 18%. I mean, Scott Bessent, I think it's been announced that he's going to keep him as Secretary of Treasury. I mean, that's a lot of people. Talking head. So more than likely it's going to be in the running here. Between the Kevins is what I've been reading the last like 4 weeks or so. Kevin Hassett, Kevin Warsh. It was interesting, like the dissent last week from Michelle Bowman and who was the other one? It was Bowman and Waller. Were those the 2 dissenters last week for the Fed? I want to say it. I think it was. Anyway, there's your candidates list. Okay. Trump demands Fed board remove Chair Jerome Powell. This is news from right now. But poly market traders aren't buying it. Yeah. Again, it's noise. Noise. Would you say that the bond market has a say in the rate cut story? I do. I think that the bond market, whether the yields, and this is the big thing to watch, when the Fed cuts, which would be September, Waller Bowman, when the Fed cuts in September, if the Fed cuts in September, watch and see. Like I said, the Fed cutting rates, this is the long end of the curve, not the short end, okay? So if they're cutting rates and the 2-year drops and the 3-month drops and the 1-month drops and the 1-year drops, that doesn't change what people are looking at on the long end of the curve, okay? House prices, mortgages, cars, Like any financing is typically done from a baseline of a 10-year or above. 10-year financing, 20-year financing, 30-year financing, right? If the market sees the rate cut and the yields go higher, it's pretty much worthless to see them cut rates. Okay. If the Fed cuts rates and the 10-year goes lower, then it's actually a good thing. Okay. I think that Trump believes so badly that the Fed cuts rates and this should make everything better for borrowing. It's not true. The bond market is going to tell us whether or not yields continue to go up or stay sticky, or they actually trend with the Fed's rate cut cycle. So the Fed could cut to 1%, but if they're only cutting on the short end of the curve, it doesn't really change this for borrowing. And this is the big, $40 trillion liquidity pocket that everyone is, if you're seeing anything on Twitter or anything on YouTube and all these like macro bears, it's all based on this ticking time bomb of this $40 trillion debt refinancing bubble, And the reason why is because most people from 2020, 2021, 2022, when things were cheap, when rates were cheap, before they started to raise rates aggressively in 2022, everything was cheap to borrow. So 2025, September onwards, 2026, the whole year, 2027, the whole year, all of those 4, 5, 6, 7 year, all those refinancings for 5 years out are going to come due. And if you had to refinance something at a 1% borrowing cost that now is a 5 to 6 to 7% borrowing cost, that changes everything. Because how do you hedge that? How do you arbitrage that? That's asking for a lot of returns, risk-free returns, which is why the bond yields continue to be sticky and go up. Because if investors want to still invest in the US and the treasury market, they're asking for higher premiums, right? They're asking for higher premiums. So, all right, let me check a couple things here before we wrap into the close. We just have a couple more minutes left. We're at 48 right now. This is down. Come on, man. This might be a cash settle type day, but 63.45 would be a magic number or lower. I've got a chart alarm set here at 45. I'm going to take a quick peek at that. We have 13 minutes left. Come on, 45. Don't stick at 50. Please don't stick at 50. It's just going to be painful. I'll take a little loss today. It's fine. It's survivable, but don't stick at 50 today. That was literally like a 13 or 10 delta today. I'm like, come on, man. Like, you just run up all day and stay at those highs. Like, give us a little bit of a pullback, get to 45, get to 40, settle in. This level here yesterday would hopefully be nice. So I'm going to keep a close eye on this in these next 13 minutes. Probably the smart thing to do would be just to kind of manage some of the risk. But if I can get back down to 63.45, there's a chance that this one stays profitable for $50, and this one actually has a chance to be profitable for about $300. Actually, it's a total of $600 if I'm right. So let's see what happens. So coming into the final minutes of the final hour, and if this chart alarm goes off, I'll be pretty happy. I'm going to set this one up as well, maybe down here into 42. See if we can settle just below this 45 handle and cash settle. Yield curve still uninverted. Correct. It basically disinverted. That I've got that chart here. That's the 10 and the 2. So we have the 10 and the 2 year that has been disinverted for a while, right? But this is really the one that I think we need to pay the most attention to. This one is, look, the 10 and 2 year has always been like a pretty good indicator for recessions, but the 10 and 3 month has been undefeated. Okay. And so this 10 year versus 3 month is now back into an inverted yield curve. And I don't know the exact dynamics of like how this all plays out with whether or not this goes down lower and stays inverted again, or actually gets above and disinverts. But what's interesting is I wrote this here. I've had this on my chart for a while, borrowed time. I do think it's a matter of time before something happens where, this whole kicking the can down the road, global refinancing debt bubble, not the end of times type stuff, but just every major crisis we've seen in the market has been because of some type of major debt event, right? Some type of major debt financing trouble. And I just think that over this next probably 3, 4, 5 years, it could very much be the case again that we have $40 trillion needing to be refinanced, not paid back, refinanced. So we're going to chart along up here. And just like that, I'm starting to see some profits. Let's go, baby. So 295. Okay, this is going to be close. Now I'm getting 70 bucks a profit here, 80 bucks a profit here. All right, let's see if I can close this thing down. So I got into the trade for a net of 295. We're at 45.82. My break even should be around 63.48 right now. Let's see this thing push a little bit lower. Come on, man. We got 9 minutes. Coming into crunch time. 44. There we go. Now let's see how I can close this thing down. 2 dot. Push lower. I'm going to try to grab 100 bucks out of this if I can. Let's go a little bit lower. Little bit lower. Okay, I'm just going to watch my mid price. Right now, it should be break even on the day. I've got about 100 bucks on one trade, about 30 bucks on the other trade. Right now, net winner. This one potentially, this one I'm highlighting here, has about $600 of profit potential. Come on, baby. I don't want to be too greedy here. I think that's silly. So 240. Oh man, that was a big pop. You a-hole. Go back down, test that low. 44.35. Come on. Come on. All right, I'm just going to say right here, try to set a, we'll see. So net, I need price to stay below 63.48. All right, I'm going to try 2. See, there we go. Come on. All right, so I can cancel that. I'm going to cancel all these pending orders so I can work with my order flow. Push a little bit lower, please. We're at 270. 7 minutes to go. Just push a little bit lower, would you? 2. There we go. There's my 245. Let's go. Come on, a little bit lower. Got filled at 240. Okay, I'm out there. Good. So that should have been about $110 profit. And then this one is good for the 50 by 60 is up about, this should be good for about 50 bucks. Okay, so I'll take the win. I'm going to watch and see how this closes. Then there you go, like 220. It's fine. I mean, it happens. But let's see where it closes. If it stays below 50 now, I'm still pulling an extra 50 bucks. So this could cash settle for 50. I'm already up 110. So I had a 290, 295 close out for 240 for 110 bucks and another 49. So 159 in the day would be the result. This one I might just let cash settle as long as we stay below 63.50. And this one's looking better by the minute. We're at 220 right now. 190 right now. That's the push I wanted. Son of a biscuit. All right. That's okay. But win in the day, always happy to do that. And that'd be a nice close. I'd be happy at like $2. 195 would be awesome. Okay. Now just stay below 50, would you? Stay below 50. 6 minutes left. And we are talking final minutes here. To be safe, I might just close this one down for break even. This one's good for 49 cents. I'll watch this one. 45, just close it for break even. Did that reject? Oh, it should be okay. Oh, it's already, all right, that's easy peasy. All symbols. SPX canceled. Okay, this one's trading down to like 10 cents now. And that other one is going to be like pretty much full profit. Son of a gun. And just like that, it's down to $1. Fudge. Less money on the table today. That'd be up around $400. Right now, it'd be up about $400. Well, minutes matter. In the final minutes of 0DT, they matter. But it's all good. This trade is up $43. I'm going to try to close this one down 5 cents. Will it close? Or just cash settle and make me another $50? Okay, it's going to be close. Who's in my daily profit play right now? Who's in daily profit play? We're watching our defense level, 63.45, 63.50. Watching closely. I mean, talking about taking this thing all the way to the freaking final minutes. I'm glad that, even though this was pretty manipulated here near the highs at 52, almost 53, that it came back and at least respected my gamma ceiling today. So now I want to make sure we stay below 63.50 to grab that extra $50. So it's trading right there. I've got a debit at 5 cents. It's not filling. We have 4 minutes left. Keep an eye on this one. And then this one is now trading at, gosh, that's so fast, 85 cents. That would have been pretty sweet. 295 minus 70. Nope. Be up $450. That feels pretty good for a day. Feels pretty good for a day. So the 5 cents still not filling, which is fine. It's likely going to cash out of here for a $50 winner. We got to stay below 63.50. Okay, Junior, are you watching or are you in? Who's in? Okay, let me get a notice out here to my daily profit play. BP members. I'm going to see win with a thumbs up. Loss with a thumbs down. Daily results. 110 plus $1.10 and plus 50. So plus $1.60 profit per contract, which isn't too bad. $160 in the day adds up nicely. Find a way to grind it out through the year. Make $160 a day, make 40 grand. Just a process, just a grind. Okay, so it can be done. But yeah, pay attention. 44.85. I'm curious where this is trading at right now. We're back up to $1. Yeah. Oh well. If it turned harder at like 45, it would have been easier to hold this thing. But when it got up to 53, I mean, I needed an 8-point swing, and I'm fortunate that I got it. So we have 1 minute left. We should be able to get this thing to stay below 50. We're right there, but yeah, I mean, that 45 and 50 were very, very sticky today. Okay, stay right there for this final minute. Cash settle below 50, and I'll grab that extra $50. Okay, now I do want to figure out exactly where the cash settle is today for SPX, because we can do the math on that trade. I'll go to the same trade I took for my daily profit play. If we're below 63.45, all is well. But if we're above it, then we have to do some math on what exactly our net profit is. So I'm showing a 63.45.06, 63.44.78. Let's see where Tasty cash settles, because that'd be my broker. I'm showing a 6344.97.78. So if we're below 6345.25, 45.11, right? Like if it's over 45, I've got to do the math, but that looks like we settled here at 45.11. Okay, son of a biscuit, man. That would have been a nice freaking winner. So 45.11. So the trade would be this. I had a 63.45 at $5 credit. Okay. So 63.45 with $5 credit puts my break even at 63.50, cash settling at 63.45.11. That would be a max profit of $489 plus the $50 that I had on the other trade, which puts me at a total of $539 in the day. Like, that's a good day. I still made 160, but everything did work out for a 539. It's fine. I'm glad I win. Like, you win the day. I can't complain. A little challenging that it came down right to the final, few minutes here. But even with the cash settle here at 63.45.09, you're walking with a good chunk of profit. If anybody was in the original trades today, so the 63.45 and the 63.50, we pulled in $1.25. Okay, so that $1.25 would actually have, it's an interesting break even because technically the break even is going to be like 95. It's going to be like 95 cents. Let me do the math here. So 5 plus 0.95 divided by 2. Yeah. So the first break even for profit would be 6345.95. That'd be my break even. And if we settled at 6345.08, I made 87 cents of the max 95 on the first trade, and then I made the full 50 cents on the other trade. So of the total trade today, we should have been able to pull in about $1.20 out of the $1.25. So net should have been a profitable day. Okay, net result for the day with SPX cash settling, the 63.45 and 63.50 lines in the sand should have provided 90% or more of the credit. My add-on trade at 6345 sell call and 6355 buy call for $5 credit helped, and cash settled at 4.90. I mean, it depends on where the cash is settling, but it looks like it settled for about 4.94 profit. So all in all, not bad. Not bad. So a win the day is always good. Green in the portfolio is always good. A day up 10 grand is always good. Winning the day, like I said, one of my goals for the day is be able to trade, size in, don't do anything silly. And I don't love fighting this thing all the way to the very end, but I am happy that this was the end result, because had it stayed right here, I would have been down today. I'm trying to think what I've been down. It would have been 63.45, probably $700 here. And then another trade would have been down around, let's just say it was right here at like 63.53. I would have been down about $1,000. So my potential trade on the day would have been down $1,000 versus walking away with 160 or over $539. It's just a day, but that's how the math works out, and I'm fortunate to come out ahead. Okay. What do we have here? Junior says, took loss for break even on the day. Just got in 2 standard 15-wide daily profit plays, broke even for the day. That's fair. What were your strikes wide enough, or you just kind of close at those tops? I mean, everything for daily profit play. If you got in early this morning, for the neutral position, you should have been okay in this environment for the first maybe 2 hours of trading. It was after that 10:30 where things got a little gnarly, right? Because we were centered here, back to center here, back to center here. That timeline, until about 10:35, you had a full hour of trading that would have offered at least a 20 to 25% take profit. It was after that rally where things got a little messy, and you would have had to have been selling the crap out of some positions up here, because it was very much neutral at this point forward, right? Like the market, once we made that rip after 10:30, that move was the entire direction for the day. And then the market just settled sideways. So you had an hour to get out of the trade, which usually that's the case. We had a lot of traders this morning close out for profit. And then late in the day, it was all chop for, I mean, literally about 13 points of chop for the entire day. But it was a wild like 30 minutes of surging there that we had from, the lows around 6,300 to the highs around 6,348. But the most important thing about this is I do this every day in my daily profit plan room. I do this every day for my daily profit plan members. And the one really nice thing about this is if you want to learn how the mechanics of option trades play out every single day, try trading every day. Because now you can see rep after rep after rep, trade after trade after trade, and how the math works. And what usually takes people, weeks and weeks and weeks, months and months and months. I mean, I'm not saying that you should, if you're not comfortable with like the day-to-day risk, then obviously don't do that. But if you're interested in learning the process, man, some of these like literally taking, I mean, I had 6 or 7 pending orders today. I got filled on 2 of them, right? And unfortunately the 2 like worked out and my levels were called, and I'm probably trading in a way that is going to give us around a 95 to 96% win rate. The way that I trade, the way that I calculate my levels, will probably win about 95% of our trades. My goal is to win 90% because that's one of the guarantees I have in my service. But the way I'm trading this and the way I'm like meticulously planning out my day for highs and lows is I'm trying to win the day, and I think about 95% of the time I can do that. And I'm not like blowing smoke. Like I know that we are on a nice little hot streak. We're averaging about 93.5% right now of the last 79 trades. And I'm just really careful and I calculate risk. I take the trades. I accept that there's risk every single day. But if I could walk away with a win, I'm always happy. Okay. So despite not making, $550 today, I'm still happy making 160. It adds up. And tomorrow's another day. So best part is we can chalk it up for success. The day wins. We're happy. I'm happy. I got some thumbs up in the chat, so that's always a good thing. And we're still monitoring the high from last week and the low from last week. And guess what the rest of the week means? It's just noise. Like whatever's happening intraday, it's just a bunch of noise. So what is tomorrow? Well, we have this big announcement today. Apple's up 5+%. The market clearly ripped on Apple being positive. Okay. So does that move us up into gaps, tomorrow? Does that try to push us up to the end of the week where we had a down week because of all the noise and it was just a fade? Like it was like a gap exhaustion fade, right? With Microsoft and Meta. Do we get all the way back to the highs again and then range? And we have like a 3% range. I still think the market can pull back 5%. I still think the market from this high right here, or even a slightly higher high, can pull back 5 or 10%. And if August is nothing but chop and nothing but sideways, I mean, the only real pressing news we have coming up is going to be the CPI data coming out next week, which I do want to take a look one more time at the economic calendar. So let's go Bloomberg. Any questions, by the way, for that? Just talking real shop and talking real trading. I mentioned this morning. If anybody has any questions ever on these sessions that I run, today was Watch List Wednesday. We had some winners knocked out with our scanner. I showed my top picks here. Here's 13 stocks I'm looking to price out and trade for the next 30 to 60 days with my pinch point scanner. We got into a daily profit play today. So if anybody ever, and if you watch this recorded and you watch this thing live, you join me every single day, all these services are available. And all it means is if you want to trade with me, almost 99% of the trades I'm taking for myself and for clients, you can have them on my services. It's not like one service doesn't get you all these trades, but there's a way that each service, each strategy is specific to, I want to make money every single day. This is daily profit play. I want to try to swing trade the indexes and make income every single week. That's waterfall income. I'm looking for major catalysts in the news. I can trade that every quarter. Essentially, we're going to get probably 20, 30, 40 trades. Double ups. This one's probably the one I have to pay the closest attention to in a 0 and 1 day environment. It's short-term options, but it's a high reward, low risk setup. Pinch point scanner gives me great trades all the time. Crash Insurance Masterclass is teaching people how to protect their portfolio so they can avoid, or not avoid, but they can manage downside risk better and offset some of those big drawdowns that the market's capable of. Project Options Edge is the more advanced, meaning I trade a lot of my margin accounts with Project Options Edge. I trade a lot of creative strategies with that. And then if you want the full gamut of strategies, this is just education, right? Like my full course here for Practical Options is cheaper than all of these services because there's not an alert service. It's just good education. It's $497 for the full course. It's 13 of my favorite option strategies. If you want the cheaper version just to get your beak wet, then the practical options quick guide is $27. If you ever have any questions on these, tell me, ask me, right? My Discord, my Telegram. You can email my team, support@prosperitypub.com, and ask. Okay. So I'm here to help. We have lots of lessons every single day, and we're in the markets every single day. So if that helps, that's what I'm here for. Okay. A couple more things before I go. Let me bring in, I've got a couple links to post. If you'd like to join my Telegram, here's my public Telegram that's around 2,000 followers. I asked yesterday what the poll is of whether we hit highs or lows. And I think I ended that poll. It was like a 60-40 split right here. 60%, this is of all the votes here, 60% said we hit all-time highs. 41% said we take out the lows. So we had a high on the 31st of July. We had a low on the 1st. Right now we're trading right in the middle. We are still in the middle of this range. There's my high. There's my low. What happens next? Do we test the high? Do we poke the high? I think this is a range trade. In my opinion, I think this is a really good looking range trade. If we, high, low, lower high, lower low, then that's where we get that 5, 6, 7%. I think we can pull back 5 to 10%. If we have a swing, high, low, lower high, lower low, then we're pushing down towards around 6,100 or so. Okay. Bank's asking, shed some light on RR on each trade. Is that reward to risk? I mean, today, the reward to risk, you're trying to stick to 1 to 2. I had trades today that, had I been filled, I had a trade today that was a 1 to 1. So I was risking $500 to make $500. I had trades that didn't get filled that were offering $900 profit for a $100 risk. $1,300 for a $200 risk. So I can structure these trades where my reward to risk is very, very favorable. And I'm trading, levels that I'm measuring each and every day. So it's a beautiful way to trade the market. Define the risk, set your levels, debits and credits. And I'm oftentimes trying to play the game where I don't want to take a lot of risk in the market. I'm trying to have high probability wins. I've been doing this a long time. It's day-to-day price action when I'm grinding out here. The other trades are very simple. This is slightly higher risk than reward, but a 97% win rate. This one, we're winning about 81, 82% of our trades. This one, we're winning over 80% of our trades. This one, we're winning about 70% of our trades. This one hardly ever pays us, but the reward to risk is like 20 to 1, 40 to 1. Because when we need it, we have it. So I could risk, $500 to get paid $5,000. Risk $500 to get paid $10,000. If it ever works, it helps a ton. But it's dirt cheap protection. Okay. This one, we've won about 95% of our trades. And I'm also willing to have kind of a plan B and a plan C. Like I can repair a lot of these trades so I can avoid a lot of losses. So again, all I'm saying is if you're interested, I encourage you to ask some questions. Let me help guide you maybe a service or strategy that you're interested in. And look, my entire focus in trading has been about risk-adjusted returns. Okay. I've migrated an $8 million currency fund into a stocks and options fund where I trade indexes, stocks, options, futures. I still trade FOREX, but I trade crypto. It's everything. And the ability to have options and add options and layers of protection to my portfolio has allowed me to have gains, close to 20% a year with drawdowns of single digits, 6, 7, 8% drawdowns on the high end with double digit gains. And last year I was up nearly 40%. This year I'm up over 28%. And I just keep grinding. It's like, I don't have expectations on what do I make every week? What do I make every day? I don't set those expectations. If I can win the day and I do that every single day, I'm going to make some money. If I can win the month or win the quarter or win the year, I'm going to make some money. It's like I've been doing this for a long enough time that it's just about placing good trades, following good rules, not being stupid, don't over leverage. And the money shows up. Making money in these markets are pretty good when you manage risk. Okay. All right. So I hope that makes sense there, Mr. Banks, on the question. I like, you can craft these trades in a way where you can take, and I always say this, if you want high probability, you're going to sacrifice some of that reward to risk. It's that simple. If you want to trade, you win 90+% of the time, you're going to have to take a little bit more risk and lower reward. That's just the math. And that's like the pros and cons of trading. But if you want a lower probability, you can increase that reward a little bit. So a 2-to-1 reward to risk is great as long as you're winning 35% of the time. That's the math. You make money. You need a 33% break even. So if you're 35% winners, 40% winners, 50% winners, you make a ton of money with a 2-to-1. But also getting filled at 2-to-1 all the time, 70, 80, 90% win rates, they just don't happen. The math just isn't there on a trade like that. So the nice thing about options is the market can do wild and crazy things, and I'm capped on my downside and I'm capped on my upside. So I can define exactly what I'm willing to risk and my reward every single day and every single trade that I take. So if you're just, I'm just sharing, like I traded currencies. I mean, I've traded currencies now for 18 years. Okay. I still like Forex. It's still a great market, but man, it is not something that I am happy with managing the type of money that I manage anymore, because I essentially trade zero leverage, use crazy small trade sizes, and I sit in positions for months and months and months waiting for my payouts. And it pays fine, but it's exhausting to just sit and wait and watch price do next to nothing in a low volatility environment like we've seen. So options is a way to take these derivatives of a stock, derivatives of an index, and carve out ways where this market already has a bias built in. The stock market is designed to go up. So you already have like a house edge. Play the 55% house edge and tilt your portfolio that way and benefit from it. And guess what? If you manage risk, it's pretty easy to make money. Okay. All right. So like I said, if you're just interested in learning, the practical options, quick guide and the full course, I have these it's an on-demand page on Vimeo that I built. If you're interested, $27 for the quick guide, upgrade for a full course, $497. If you want to trade with me, if you want any type of alert services with me and copying some of my trades, then these are the services. You can get any of these services with prosperitypub.com. Okay. Give the team a call. I should have a website rolling out here hopefully soon. It'll be chrispulvertrading.com, and that'll be a spot where all these are also housed, located, on-demand webinars, get some more information so I can direct you to that as well. Okay. All right. So before I go, I'm going to go ahead and share my Telegram here so you can join the Telegram. You can also, if you'd like to join me every single day, this daily profit plan room is open every day, Monday through Friday at 9 a.m. Eastern time. I will share 2 links. So there's my Telegram channel right here. So Telegram, I'll post this. Chris Pulver Telegram, and then Chris Pulver Daily Profit Plan Room, Monday through Friday. That link is right here. Okay, a couple links to share, and then my Discord. If you'd like to join my Discord and talk, if you want to hit me up with anything in the public chat, stocks, options, futures, Forex, crypto, just want to ask me a question, you want to do some private workshops with me, whatever you want, it's all there in my Discord. I think I have a pretty clean Discord. I try not to make it confusing. I see a lot of Discords that are just like channel after channel after sub-channel, some-channel, and thread. It's like, I don't like that. I just want it to be a place I can put a lot of content, any links, helpful information. Discord's pretty straightforward. And I'll give you a 30-minute link if you'd like to join. So usually when people ask me in the YouTube comments like, hey, give me your Discord link, I just say, join me live and ask me. Okay? Because I'm only going to put this link out for 30 minutes. There's too many scammers on Discord. So I want to make sure my link is contained, and then after 30 minutes it expires. Okay, so here is Chris Pulver Trading Discord. There you go. So you got my public Telegram, you have my daily profit plan room if you'd like to join, and then you have my Discord. So ways to find me. And again, that's where you're going to find me. You're not going to find me in WhatsApp. You're not going to find me in some oddball, random channel. Like, this is where I'm at every single day. I'm on YouTube and I'm in my live sessions and I'm servicing my members and followers for trading. Okay. If you wonder how is this possibly Chris, it's not me. I'm on the same channels every single day. So if you want to find me, join my Discord, okay? And find me here. Real Chris Pulver, Real Chris Pulver, Real Chris Pulver. All these are me. These are all my comments, okay? So any updates that I have, free group chat for everybody, Forex, stocks, options, futures, okay? Just it's all for everyone to talk. Okay. I work with a lot of private, like if we have private sessions, like 1 hour, 4 hour blocks. I work with groups up to 10 people. If you'd like to split the cost, that's fine. I've got a lot of good connections in the industry. If you want, savings on TradingView software, some of the indicators and software bundles that I use, some of the tech I use every single day. I have all these links. So anyway, I'm here. Hopefully here to help. Let's make some traders happy. Let's make some money. Manage risk. That's all I got to say. Manage risk. The money side's easy if you manage risk. Okay, I'll let you go. Have a good rest of the day. I'll come back and do it again tomorrow. Take care. Bye.